morning, and welcome to the Gold, Goats, and Guns podcast. My name is Tom Luongo. It is Thursday, May 9th, 2019. I'm here this morning with a very good friend of Gold, Goats, and Guns, David Stockman, former OMB director under the Ronald Reagan, published author, accomplished author, publisher of Contra Corner, and all-around great libertarian gadfly. It's a real pleasure to have him on the show this morning, and I really appreciate David coming on. His latest book, Peak Trump, The Undrainable Swamp and the Fantasy of MAGA, is in stores now. There'll be a link in the description to this the show down below for you to get a copy of it. I've read it. It's very, very good. So I'd like to welcome David to the show. David, thank you so much for doing this taking time out this morning to do this.
Great to be with you, Tom. We have a very timely moment. Many of the things that I addressed in Peak Trump seem to be materializing as we speak. So we got a lot to talk about.
I agree completely. I'd like to start with that. Let's start with the thesis behind Peak Trump. If you just talk about that for a few minutes to let everybody know where we both are, because I've used your thesis since I read the book earlier in the year in many of my posts. So a lot of my audience already understands some of it. But let's just go through all of it so that we can use that as a jumping off point to talk about current events, if you wouldn't mind.
Sure. Well, the thesis is that Trump inherited a failing economy, a reflection of 30 years of bad policy, particularly driven by what I call monetary central planning at the Fed. That was accompanied by what he even called a big, fat, ugly bubble during the campaign. And yet he got into office and made what I consider an egregious rookie mistake of pivoting and embracing the economy that he ran against and the bubble that he warned about. And we're now in a phase of this where I think he's about ready to take a huge fall. So that's the fundamental thesis, that there is no Trump boom. He was just coasting on the last year or two, last few quarters of a business cycle expansion that's been underway for 118 months. Tepid as it has been, it is now the second longest in history. And it has accumulated a huge amount of structural problems on Main Street and enormous speculation and bubbles on Wall Street that are simply waiting for the pin or the black swan or the orange swan, as the case may be, to bring the whole thing tumbling down. He is not prepared for that. His constituency isn't prepared for that. He was elected for a good reason, and that is establishment policy at home and abroad is failing. He said that he would fight for or position for America first. He's ended up being co-opted by advisors and staff who are devotees, lifelong players in the empire first policy that we actually have. He understood that flyover America domestically was left behind, that we had kind of a phony prosperity, but he's done almost nothing to address the underlying cause. In fact, he's actually insisted on doubling down on easy money and low interest rates and financial repression at the Fed when that's the underlying cause of the problem. He is correct that our trade accounts are way, way out of balance. It's absurd that we have a $950 billion merchandise trade deficit with the world, or $450 billion plus or minus with China. But the point that he fails to understand, that we address at some length in the book, is that this isn't the result of bad trade deals or dumb people in the Oval Office who got snookered by foreign countries and negotiators. It's a function of bad money inflating our domestic cost, wage, and price structure at a 2% or better rate year in and year out, at a time when we needed to have deflation, not inflation, in order to remain competitive in the global economy and keep jobs and production and incomes here. So, in other words, Trump was elected as kind of a fluke of history, desperate protest, particularly in the Rust Belt counties of a few states where he, picked up 46 electoral votes in Pennsylvania, Michigan, and Wisconsin. On the margin in Rust Belt counties, in those three states where he won the Electoral College and the election, he won by 90,000 votes collectively out of 13.5 million cast. So this really was a fluke, but unfortunately, he was a protest candidate, a disruptor who had no agenda, no program, no inkling of what needed to be done to address the underlying symptoms and problems that his candidacy resonated with out in what I call flyover America. So we're now at a juncture where he's gone off the deep end, driving the federal deficit to unimaginable depths at the end of a long, long business expansion. You can imagine where we'll be when the economy finally rolls over into recession and revenues really collapse. He's got a trade war underway, not just with China, but around the corner. We're about ready to have national security tariffs on BMWs coming in from Germany. How that is a threat to the liberty and safety of people in Lincoln, Nebraska is kind of hard for me to figure. But that's coming down the pike because he simply misunderstands the problem that he correctly has identified and is attempting a kind of art of the deal trade policy, trade war that threatens to blow up the entire economic system. Right. If this continues much longer. That's where we are this morning. That's where we'll be if the 25% tariff goes on with China. And I think, has the potential to really be, the pin in the bubble, the black swan that starts things heading south in a pretty uncontrollable and dangerous direction.
I honestly could not agree more. And what's fascinating for me at this point is, as a matter of fact, was working on a blog post this morning to talk about this exact thing, because last year I actually wrote an article called "Will Trump Sacrifice the Global Economy on the Bonfire of His Vanity?" And if you look at what's been happening over the course of the past week, it's pretty obvious that he is abreacting, I think, to the China refusing to give him what he wants in a trade deal. All of these things that are in effect real challenges to his authority. He's overreacting to the Bay of Fat Pigs, that I've called it, down in Venezuela. He doesn't know what to do here because he doesn't have any good options. I've been saying from the beginning that he has no leverage really with China in the trade talks because of what you just talked about, because of the general thesis, which is that the fundamental problems with the economy here in the United States are structural. From, if Don wants to understand why we have continued to have such a massive trade deficit, could you stop spending $1 trillion more than you bring in?
Yeah.
Because those dollars go into the general economy and they get spent here in the United States. And what do we do with them? We go and we buy TVs and computers and iPhones and stuff from China. I mean, that's what we do with the money. It's not like it's not, and nothing he's done budget wise is going to bring domestic production back here. And the other thing I want to ask him, and I was talking about this yesterday on a live stream. I said, why do we want the low-skilled manufacturing jobs back here in the United States. I mean, why would we blow up the world economy for this? It's one thing, of course, to blow up, part of, to try and rebalance things. And he's got half the problem right, or half the problem solved. Cut corporate tax rates, cut, small business tax rates and all that. But the other side of it is that the general tariff rate is so low that it doesn't matter. There is no barrier to trade here. And it just seems completely insane to me. So we're geopolitically, we're now going to start an entire war with everybody around the world.
Yeah. Listen, you're hitting a lot of key points, the nail on the head. One, there's a complete vacuum of facts here, and we can talk about a couple of those. And secondly, despite his best intentions, we have a case again and again of Trump being advised by people who have a totally different agenda. Now, as to the facts, the average tariff on goods coming into the United States today is less than 2%. Canada's 1.7%. Germany's 1.8%. Even China is 3%. And if we look at charts that go back 2 or 3 or 4 decades, tariff levels all around the world have been coming down steadily until they've reached the de minimis level. So that isn't the problem. Secondly, Trump is properly focused on these giant bilateral and worldwide trade deficits, but his advisors aren't. If you look at what Lighthizer is after, who's a lifelong K Street product swamp dweller, if there ever was one, or the neocons, Navarro, who's kind of a crazy man, neocon, anti-Chinese militant. What they're pursuing in these negotiations have nothing to do with bringing back the millions of jobs that probably have migrated offshore due to economics and monetary policy. For instance, one of the big issues is if you go to China, you have to be in a joint venture, and you apparently get pressured sometimes to transfer technology. Well, fine. If you don't have to go to China, it's not the job of the United States government to be the trade nanny for every company that's domiciled, between the Pacific and the Atlantic, who wants to go to China in order to participate in the growth and come on CNBC and then brag about their China operations and why they should have a higher multiple and higher stock price. If they want to do that, fine. If the cost of doing that is sharing some technology, they have to make the business decision on the cost and the benefit of so doing. But what are we doing here? We're putting, at midnight today, Thursday, we're putting $62.5 billion of cost on 250 billion of goods coming in from China that are going to hit hard consumers at Walmart, his voters, or small businesses who buy components and semi-fabricated parts from China to finish, the manufacturing and sale here. That they're all going to be hit with this, or in the end, a lot of U.S. importers will resource their supply to, let's say, Vietnam or Indonesia or India. And I call it the greatest inadvertent foreign aid policy that's ever come along. Vietnam's going to get more work, and it's not going to bring any jobs to China. And I've gone through a lot of the data. I have it in some of my blogs. But if you put a heavy tax, 25% on low labor-intensive, low-cost goods coming out of China, you're not going to bring them back to the United States. You're just going to shift the sourcing to the next lowest-cost supplier on the world labor cost curve, which might be Vietnam, or it might be Bangladesh, or certainly will be Mexico. And what have you accomplished? You've just stirred up the pie, and then in the process created retaliation. The numbers are kind of crazy when you look at the 2018 trade balance with China. We bought 563 billion worth of stuff from them. We exported 120 billion only, a massive gap. And now, as a result of what he's doing, you're actually going to see retaliation against the, minuscule exports that we have now that will come back and, monkey hammer, let's say, soybean farmers in Ohio, in Illinois, and grain farmers in the plains and so forth, as well as small business exporters. So this thing, it's really turning into a mess. And it's in part because he thinks he's bringing jobs back. He said that last night at the speech in Florida. He said, this won't stand. We're not going to let them steal our jobs. Well, that's a fine sentiment. If he wants to solve that problem, it's 4 blocks away at the Eccles building, right around the corner from the White House. But you're not going to bring jobs back by hammering the Chinese about how they practice what I call red capitalism in China. And that's what this is all about. This is all about helping K Street lobbies, and I call it corporate welfare because that's really what it is, helping big U.S. companies get a better deal when they go to China to produce or invest or source or a joint venture. That isn't, that's statism when you put the U.S. government in the middle of that nexus. And it's the reason why we have all of the economic and social problems we have today. Too much government, too much state, and in effect, what Lighthizer and Trump's team stand for is even more state. I call it, the big trade nanny in Washington, which would really fill the swamp because all of these mechanisms they're talking about for enforcement and for measuring progress and all the rest of it just will generate untold work for Washington lobbies representing companies who are going to need their help in order to navigate this Rube Goldberg trade regime that they're trying to create. I kind of hope it blows up. I mean, it wouldn't be a good thing in the short run. The market will take a real plastering. But at least maybe it will reveal, if that happens, if this breaks down, even for a limited period of time, that what's on the table is not bringing production, jobs, and income back to America. What's on the table is corporate welfare and, sort of trade nannyism that isn't going to help anything at all. And in the process is risking a tremendous upset in the global economy and putting U.S. consumers and farmers and small businesses and exporters in harm's way. It's crazy.
It is crazy. And from, when I was listening to you talking, it reminds me that one of my fundamental problems with Trump while he was running, and I said this the entire time, was that he's fundamentally an economic mercantilist, and he's angry with China for running their mercantilist policy for as many years as they have. But the thing about it is that the reason they've been able to get away with running such a massive policy that way, the mercantilist policy, is because we've allowed them to. The Fed, as you rightly point out, the Fed has created and Wall Street and the Congress, by spending way beyond their means, by quantitative easing and all of this stuff, have created the conditions for China to continue running this policy. I remember talking to a friend of mine about this, and he's like, the Chinese, the mercantilist thing should have ended a decade ago. And the China's sitting there going, dude, we'll just keep taking your money if this is what you want to do. Well, I can't believe they're this dumb, but okay, if this is what you want to do, we'll keep doing it. And Trump now is just a typical politician who refuses to attack the actual problems in Washington. And I call him a coward. He's just a flat-out coward. He knows what the real problems are, but like every other politician, no, let's go blame the other guy. Let's blame them for stealing our jobs and blame them for everything. The real problems are. Well, he refuses to actually to go after anything here at home. And worse than that, he's using this as a pretext to achieve geopolitical goals, which are horrific. Yeah. And I think all of this stuff, and this is why I want to transition away from the domestic stuff, because it's the international stuff that's really, really important to me. Because there's even more going on than that, which is that as we watch the events of this week play out, with the trade talks breaking down, with the threatening Iran, more sanctions, no oil waivers, threatening Lebanon, Pompeo going to Iraq to try and shake them down. All of this stuff is in service of his deal of the century about Israel and Palestine, his horrifically bad two-state solution. I don't know if you saw the leak, the version of the Kushner plan that the yes. Israeli media put out yesterday. It's ridiculous. And it's obvious that what he's doing here is he's trying to get this through by doing the Bolton thing of squeezing everybody until the pips squeak, and then hoping that by negotiating in a surrender or die mode, that someone will actually surrender. And no one's surrendered to them yet. And they don't realize that that these people are going to eat dirt before they ever surrender to people like Lighthizer, Bolton, Pompeo, and Trump. These guys are lightweights. They won't submit to the friggin' EU, for Christ's sake. And Angela Merkel's 10 times the negotiator that Trump is.
Yeah. Well, that's an issue, that he considers himself the great deal maker, negotiator, but actually he's pretty poor.
He's terrible.
Because he's so impulsive, he's so glandular, he's so unfocused, he's so megalomaniacal, that anything that seems to slight his ego at the moment, he lurches off on. And that's the worst thing you can do if you're playing some kind of long game, 3D chess and all the rest of it that they give him credit for. None of that credit should be given, because he's flying around by the seat of his pants, making it up as he goes along, responding in ways that I say are not rational or intelligent, but simply glandular. But the worst thing is all of his good instincts. I voted for him for a lot of reasons. I wasn't going to vote for Hillary, but I voted for him because he sounded like he was saying, we're going to withdraw this global empire. We're going to reel in our role in the world. Regime change has failed. We're not going to do it. We're footing the bill with which was then a $650 billion defense budget, which is even bigger now for the rest of the world. We're not going to do it. There's no reason to be in a head-knocking contest with Putin and Russia, Cold War 2.0. I think I can pursue rapprochement. So all of these things, it was somewhat inchoate, it was somewhat crude and primitive, but at least directionally it was America first, not empire first.
Right.
And yet he gets into office, and the key point, which people don't like to talk about, but the key point is that the funnel into the White House and into his brain, whatever's under that great big orange mop, came through Jared Kushner and the whole neocon branch office in Washington and its relationship with the neocon branch office in Israel. And so that's how you got advisors who are 180 degrees the opposite of what he talked about in the campaign and what I think he still thinks. Pompeo, Bolton, what's his name, Abrams. I mean, you could go on and on. He's surrounded himself by people who want to nullify his foreign policy. And so, in effect, it is being nullified, and that's how we got into this mess with the Iranians, which we shouldn't be in today. The idea that we're saying to a sovereign country that hasn't invaded anybody that I know of, who has only sent modest amounts of aid or military personnel to countries where they've been invited in, unlike the United States, where we're in 100 countries and have invaded quite a few where we weren't invited, nevertheless opened up an economic war with the Iranians to the point that we're saying every last drop of oil down to the last barrel and gallon is going to be driven out of the world market. Now, what kind of imperial arrogance underlies that idea? It's the opposite of America first. It's the opposite of protecting the homeland. That's sort of pursuing the empire to the nth degree. Now, I focus on that one, but, the Venezuela situation is the same, exactly the same thing, and it's the same cast of characters who have misled him. And also you have a subtext in the whole China trade negotiations coming from the neocons around him that have, tried to demonize China and create, the next big threat so that we can keep, $750 billion a year flowing into DOD, and really it's 800 or 900 billion if you count everything else. In fact, I say it's $1 trillion warfare state because, because of all these stupid wars that we've had, unnecessary, counterproductive wars going all the way back to Vietnam. We've got a $200 billion a year veterans budget to take care of people that ended up without incomes or with lifetime health problems because of a misguided foreign policy. So you got $1 trillion worth of money at risk, at stake in the imperial city, as I like to call Washington. And that money speaks. It drives policy. It self-selects the personnel. Despite his best intent as an outsider, not caught up in decades of this, he's been taken captive by the apparatus, by the deep state. He's not drained any swamp. That's why I have on the cover of my book all the swamp creatures pouring off the top of the White House roof, right? Because he's surrounded by them.
It is crazy, and it's funny. It's actually worse than I ever imagined. I voted for him for the exact same reasons you did, and then I went one step further. He was the first one to actually challenge Israeli orthodoxy as a foreign policy thing early on to differentiate himself from all of the other crazy neocons who were running for president at that point. Because at that point we were looking at the typical cast of characters to be losers to Hillary to Queen Hillary, who was the ultimate neocon, and despite her protestations to the opposite. And when I look at what's happened here, it's very obvious that the first thing everybody did was to wall him off from any real information. Friends of mine that I talk to all the time say, look, the guy gets all of his information from Fox News. If you want to be a member of the Trump administration, just be a Fox News commentator. I'm just waiting for for lightweights like Dan Bongino to become Assistant Secretary of State next, right? And then after somebody else finally defects from this clown show. And it really has become a clown show and I know that Putin is done with him for all intents and purposes, though Putin will always take a phone call because he has to. And I'm watching the Israelis, I say it all the time. I don't have any enmity here. I just think, look, if I were Israel, if I were Netanyahu and I had this guy in the White House, I would take as much egregious advantage of him as I possibly could because the generational shift in attitude towards Israel is real here. It's moving away from this unconditional support of Israel. Once the baby boomers, go away, this is a theme of mine that I touch on all the time, that my generation, Gen X, and the millennials behind them are not going to stand for this. They're looking at a life of debt slavery, and lower standards of living and the rest of it. And they're not going to stand for this, that we're going to send this stuff overseas and we're going to fight these wars and we're going to do all this stuff. They're all going, you've got to be out of your mind. And, looking at this Kushner plan, one of my subscribers said to me this morning, thanks for the alt-right recruitment, advertisement, because that's what he's doing. And they don't realize that if you push this hard, that you're going to get the kind of ab reaction that we've seen in politics. Is the problem with the Democrats having pushed this Russian narrative, this anti-Russian narrative so hard in order to get Trump back into the box of foreign policy orthodoxy, which is why I think it was done. Ultimately, it was either to get him out of office or put him exactly where he is now, which is that he has some political capital left, but he's completely neutered and surrounded by, the very worst people in Washington. The guy who's the happiest about all this is like Bill Kristol, right? A guy who literally wept on television after Trump was elected, and now is just crowing after he's lost everything, but they're still going to wind up winning. And the really scary part about this, and this is what I want to move into next, is we talked about, you talked about the endless inflation domestically, and it's still happening, right? I chart the Fed's balance sheet every week, and I look at it, and I'm watching the unabsorbed reserves of the banking system falling, and gross currency and issuance rising as a percentage is rapidly rising, which is incipient. Effectively, it's going to be incipient hyperinflation when we have the shift out of U.S. assets, which is what's coming next. Okay, so my general thesis, Dave, and I know you know this, and I'll just to remind everybody, is that we're staring at a global financial collapse based on slowing dollar liquidity, or falling dollar liquidity, which has already begun, right? Trump is running a $1.2 trillion deficit. The Fed has backed off a little bit on $600 billion worth of quantitative tightening, but we're seeing it in emerging markets. Emerging market currencies are blowing up. Trump's going to put increase the tariff on China. China's going to devalue the yuan in order to keep pace with all of their emerging market, trade partners. They're real trade partners. Let's not kid ourselves. And they're going to continue to recycle whatever dollars they can into Belt and Road Initiative. And it's all but all that is going to try and collapse. And with $9 trillion worth of non-bank foreign corporate debt denominated in dollars, that has to be paid in dollars and serviced in dollars. If you slow down global trade, and this morning's trade deficit numbers, are a perfect example. Basically, trade with China year over year contracted 15%.
Right.
Okay, 15% means exports and imports, and still the trade deficit, while the trade deficit narrowed, overall trade with them dropped by 15%. Well, that means the global flow of dollars is dropping like a rock. And that's why the Turkish lira is blowing up. That's why the Thai baht's going to blow up. That's why the euro is blowing up, is collapsing. This is all of these things. And once this starts to go, the first wave of this will be a massive move into the dollar that Trump and the Fed can't control. Trump wants a 0.5 point or a 1 point rate cut because he's trying to keep frackers from going busto in Eagle Ford and Permian, right?
Right. Exactly.
But that's not going to solve the problem when global demand for oil drops by a million barrels a day, right? And we're pumping 15 million, and you're going to sell it at what, $25 a barrel? They can't support $25 a barrel. So what will happen to, but there will be a massive rush into U.S. assets. This is why the stock market continues to levitate at 27,000. This is, or the Dow is knocking on 27 grand. And U.S. Treasury bonds, they can get away with such low interest rates, on U.S. Treasuries, but we're reaching the end of that
yes,
wave.
I might jump in on that. Kind of a crucial thing happened yesterday. You saw the 10-year auction, and this was the worst auction in 10 or 11 years.
Yeah.
In terms of the fact that the dealers had to take most of it down because demand from both the domestic sources and international dried up quite rapidly.
Absolutely.
Substantially. So, and that's only a measure of things to come. And I agree with you on what's called the dollar short thesis. And that as world production and trade shrink dramatically in the face of all this, it's going to only, the problem is only going to intensify. The thing that people don't realize is that when you go for 10 years of aberrantly abnormal, I guess I'm trying to say, monetary policy with interest rates that were really negative in real terms from April 2008 to November 2018. In other words, the Fed funds rate was under the running annual inflation rate. You are essentially sponsoring a devil's workshop in the global financial system, and people have no idea of the mischief that's been going on there. The reckless bets that are being made. We can see it everywhere. At the at the peak of the last cycle, I think there was 400 or 500 billion worth of leveraged loans outstanding. Now it's 1.3 trillion. I mean, we're up 4x from where it was last time when we thought we had a wake-up call in a near-death experience with the great financial crisis. So the thing that really, I think, is more important than anything else as a takeaway is that there is rot everywhere in the global system, unnatural mispricing of almost every financial asset there is, starting with the 10-year treasury, which is the fulcrum security in the whole global system, and then going from there to everything that prices off from it on a yield basis or a cap rate basis or yield spread or cap rate basis or whatever the case may be. So they don't see a recession coming, and you've had all these statements from Powell and Janet Yellen and all the rest of them. Well, it's all fixed. We don't see any symptoms like 208, 207. Well, they didn't see those symptoms back then, and now they're just looking at the wrong ones. Okay, the banking system may be in better shape, but now you have trillions of dollars worth of ETFs that didn't exist. You have trillions of dollars worth of mutual funds in both stocks and high-yield corporate debt that didn't exist then. It all marks the market overnight. People can sell at the closing price. It is a far less stable situation than we had in 208 when a lot of the, risky assets were in the banking system where they could decree no mark to market, and where you had FDIC, safety net insurance, and where you had the Fed pumping in hundreds of billions a week during the worst of it in the fall of 208. You don't have any of that now. You basically have 6 or 7 trillion of ETFs, indexed funds, and open-ended mutual funds that can all become subject to a run on the bank, so to speak, if confidence in this whole giant Ponzi scheme begins to unravel. So that's the real danger, and none of them see it. You know why? Because they believe that what they're doing is correct, and that they're presiding over, God's work or something, when in effect they're creating a monster like never before in history.
It's crazy, and that's just the Fed. Then let's add the ECB and the BOJ, right? The European Central Bank and the Bank of Japan, right? They've destroyed their bond markets. There is no market for European sovereign debt. There's no market for Japanese sovereign debt, Japanese government bonds. So we're looking at an incipient sovereign debt crisis is the issue, right? And Martin Armstrong's been banging on about this for years, and I've been banging on it for at least the last 2, which is exactly the same thing, which is that at a certain level, everybody's going to realize that these guys don't have any answers. And the real crisis of confidence comes when we lose confidence in the central banks. And what Trump and what happened in January when Powell capitulated after raising interest rates in December, I said right then and there, I said, the Fed's done. The Fed just told the whole market they don't have any answers. And then the ECB followed up 3 weeks later and said the same thing. They changed their language and all of that stuff. And I said, that's your turning point. Because if everything is so rosy, why do you want to cut rates? Why are you not continuing to raise rates?
That's a point. Here we are, as I keep saying, month 118 of the second longest business expansion in history. The longest one was 119 months, and that was the tech boom of the 1990s. There were a lot more headwinds then, tailwinds then versus the headwinds today. But it's important to remember that at the top of that cycle, roughly where we are today, there was a 2% of GDP budget surplus. There wasn't a massive treasury borrowing. Unlike this year where they're going to borrow 1.2 trillion, crowding into the market at the top of the business cycle, putting upward pressure on rates. Back then, the balance sheet of the Fed was 500 billion. It had taken 86 years to get there. Now, we peaked at 4.5 trillion, and they're trying to slowly shrink it, even if reluctantly, under QT. Back then, the red Ponzi was just finding its sea legs, so to speak, and was about ready to boom like never before. Today, it's saturated with 40 trillion worth of debt on a 12 trillion GDP. If you give credit to their numbers, which I don't, the EC was then just coming into being, and they were about ready to have a borrow and spend bonanza that carried the system for a decade. But today, it's a socialist dystopia, sinking under debt and the utter confusion of a central bank, the ECB, which you will have to go down in history as one of the greatest monetary abortions that, under Draghi that's ever been done in history or contemplated. So when you put all of that together, you realize that at month 118 of this cycle, with all of these headwinds versus tailwinds, it's only a matter of time before the furniture starts breaking.
I know. It was funny when I was reading Peak Trump, when you graciously sent me an advance copy of it, because we were supposed to do this back in February and we just never got around to it. That was the thing that really stuck out to me. There were a couple of things that I took away from it, which was that I hadn't thought about, which was that at the peak of the last cycle in 1999, around the Y2K, the Chinese hadn't gotten started yet. And so there's no capacity to take on more debt. I've been using the term debt saturation for a long, long time now, but it was really eye-opening for me to say, oh, you're right. And then we had the rise of China, which could become a huge liquidity sink for so many years, and the fact that now the Germans had consolidated so much of Europe under their rubric so that they could export kind of internally, run the same thing, the same expansion, mercantilist expansion within the European Union, using the euro as the protection tariff as opposed to anything else, as opposed to just a flat protection tariff. That was really fascinating to me, and it really helped galvanize, and it was really important. I actually really appreciated you doing that, because I really needed some clarity at that point. Back in February, things were getting really confusing to me, and I was actually starting to lose thread of the script, and I mean, as confusing as it is, I mean, you try, right? You try to stay it all, you try to keep it all together, and I read that, and I'm like, oh, he's absolutely right.
It's hard to keep it all together because we're in utterly uncharted waters.
Absolutely.
And we're in a world of 24/7 cable, news, and online instant response and breaking headlines and all the rest of it. That people have lost perspective on the foundation of what we're sitting on. And so I keep saying, we are in a world that is dominated by the cult of central banking like nothing in financial and economic history, if you cover any reasonable period of time. And people need to recognize that isn't natural, it's not stable, and it's not sustainable. And that's why what lies ahead is very different from what is immediately in the rearview mirror. Take the numbers. In the year 2000, the combined balance sheets of the central bank were central banks of the world, all the big ones that you've just itemized, were barely $2 trillion. It's 25 trillion today. So in the course of this century, which isn't even 2 decades old, we've had a 12x increase in the balance sheet of the central banks. What does that mean? They have made about 22 trillion of financial purchasing power out of thin air. And of course, when you buy in 22 trillion worth of sovereign debt, and then in Japan, ETFs and securitized real estate and In the case of the Bank of Switzerland, you end up being the biggest share owner in Apple and
Right.
a lot of other big global corporations. My point is all of that artificial purchasing power that was, snatched from thin air by the central banks has distorted the pricing of all financial assets. The rule of the law of supply and demand hasn't been repealed. And when you throw 22 trillion worth of demand into the financial system with no offsetting changes on the liability side, you basically levitate the price of all financial assets and therefore misprice the entire system. It's very different. It's very different than when you or I decide to buy some stock. Either we got to save out of current income and not spend it, or we got to reallocate our portfolio and we sell some bonds and buy some stock. That's how the world works. That's supply and demand. That's, asset allocation. That's allegedly the efficiency of the free market at work. But when you get to the central banking cult, it's all about free money wrecking free markets. And that's what a lot of conservatives don't get, that their enemy, number one, number two, and number three is the Fed, the Fed, the Fed, and the convoy of central banks around the world that more or less ape what it's doing and defensively have to essentially copy what it's doing, at least as their officials see it in the short run, in order to protect their own mercantilist export-oriented policies. So it's been a bad disease. In other words, the number one export of the United States in the last 30 years has been bad money, emitted by the Fed and then circulated into the international financial system and doubled down upon by all the mercantilist countries of the world, the oil, Gulf oil exporters, China, and the whole complex of Far East exporters. The whole system is being driven by 12 people sitting on the FOMC who were so immersed in groupthink that they can't even see they're talking stupidity. Like, when you hear them talking about R-star, I mean, you almost think, that this is some kind of what's R-star? Well, it's an invisible natural rate of interest that changes every day. What the hell is that about? Okay?
It's worse than that. It's for all of so people understand what you're talking about. What R-star is. R-star is in the Black-Scholes equation for pricing derivative assets, be it options or CDOs or whatever. That the R-star is the default risk rate of interest, right? And for all intents and purposes, people treat that as zero for the United States. Okay, and that is the fundamental problem. That's the fundamental problem. I'm actually glad you brought this up. I haven't talked about R-star in years. It's funny, but
it's worth talking about.
Of course it is, and dueling multipliers and all this stuff like But R-star, by the market setting it effectively at zero, that there's zero default risk on the part of the United States, which is, by the way, the real reason why the dollar is the dominant trade currency in the world and the dominant financial currency in the world, is because we have never defaulted on our debt, and we don't plan on doing so. Yeah, we're going to obviously inflate it away. But because of that, it creates a fundamental mispricing of risk in every financial transaction there is in the world. Every bond, every CDO, everything, they're all fundamentally mispriced. Every CDS contract, every interest rate swap derivative, it doesn't matter what it is. And because of this fundamental thing, now, in some ways, CDS's credit default swaps try to create a quantitative value for R-star, right? And it's done for all the other currencies in the world, and all the other sovereign debt in the world. If you're 300 basis point, you've got a 300 basis point CDS rate on an Italian 5-year bond. Well, you can plug that into your Black-Scholes equation to figure out what the actual price of the bond should be, right? If you, or some transformation of that number. But we don't have that, but we don't get that with the United States Treasury bond. And as you said earlier, the 10-year note is the benchmark rate for the entire global financial system. And so a bad auction in that issue
ricochets through the entire system, cascades through the entire system.
Absolutely.
But it's sort of on point with something we mentioned a while back, and that is we are at the very tippy top of a struggling but long business cycle. Mm-hmm. And, by all historic standards, you would expect that at that point, rates would have normalized, that, in fact, pressures in the system would be driving rates to the point where they begin to curtail the rate of credit expansion, and therefore the economy goes into the normal adjustment. But here we are, because of this cult of central banking and this massive expansion of balance sheets. Here we are, month 118, and there is still 10 trillion of sovereign debt in the world trading at a negative nominal yield. Now, that's crazy. That is per se crazy. And sometime, maybe a year, 2 years, 3 years into the, broken furniture that's coming, people are going to say, why did we not notice?
Some of us noticed, and I think the markets are being, this is the interesting part about it. I really do believe that we've entered into that moment where the dollar's starting to break out. You look at the U.S. dollar index, we're starting to get the long-term chart of the U.S. dollar index is screaming that there's a technical breakout occurring above 97.5 on the DXY. And I've been talking about this for a long time, saying this is what we want to watch for, because this is when it'll start to get uncontrollable. They'll start to lose control of it. So desperately holding the euro above $1.12, for example, right? They're just trying to hold the British pound at $1.30. They don't want it to collapse from here, because the dollar index shoots up, and then momentum will then start to carry and start to unwind a tremendous amount of interest rate derivatives and all this other stuff, especially with Deutsche Bank sitting there on the verge of complete collapse, right? We had that. I mean, there's so many things there's so many potential black swans out there. The Turkish lira blowing up, and there's $100 billion of that garbage on European balance sheets. There's all sorts of stuff.
Yeah, you're so right. There's warning signs everywhere, and they're being totally ignored because, going back to my point, the recency bias is so overwhelming. Mm-hmm. The world that we live in is so short term. Literally, it's not even hours or days anymore. Sometimes I think it's minutes and nanoseconds. That these symptoms that we can see so easily, the 10 trillion of negative yielders, are accepted as part of the landscape, like the sun coming up every morning and setting every evening. It's viewed as kind of natural and there and not to be noticed, when actually it is a screaming, flashing red light saying danger immediately ahead.
Yes, absolutely. I'm dead serious when I say it. The thing about it is, the scary part about this is how crazy it's going to be in Europe. All of this stuff, it looks like, is coming together at the end of this month. Right, you've got European parliamentary elections, you've got Indian elections are going to finish up, you've got Danish elections are coming up, and then you have, on top of that, you have this morning, today, the tariffs on China will go into effect, but Trump exempted all cargo currently in transit. Now, the bulk of that's going to show up here, according to Zero Hedge this morning, in the next couple of weeks. So that puts it right in line with everything else happening on the weekend of the 22nd of May. So over the course of the next 2.5 to 3 weeks, we could be staring at a literal change of the global, not only financial, but political system.
Yeah, I agree with that, and I want to jump in here because I saw a guy on CNBC yesterday, Bubble Vision as we call it,
right?
Actually taking the facts you've just recited and turning the implication upside down. He said, "There's nothing to worry about because it doesn't impact anything that's on the water. which means we won't see any impact for several weeks. Now, the question I had was, what do you think is going to happen at the end of those several weeks? Is the world ending and no one told us? I mean, how could someone take comfort in the fact that stuff on the blue water is exempted when there's a monster on the other side of the exemption? But that is, again, a measure of how short-term it is and how naive, actually, both ends of the Acela corridor are. All these day traders down on Wall Street and talking heads think that when push comes to shove, the powers that be, the authorities, will do whatever it takes to keep the game going, the ball in the air, and the stock averages up at their nosebleed levels. And this isn't, they barely did it in 2008. Let's just face that, 2008. And you had actually people that knew what they were doing somewhat. I mean, I'm totally against Paulson and Bernanke, but at least they had some idea of what was going on, and they were able to orchestrate a craziness where Paulson got down on his knees and begged Nancy Pelosi to help George Bush solve a problem before this sucker blows, as he said it at the time. Well, that was then, and they did it by a hair. But what's going to happen now? You have a totally divided Fed. It's going to be under vicious, relentless attack by Trump when this starts to come unwound, because he's going to blame them, and every day he's going to tweet it, around the clock in a very vicious, angry way. You have a partisan split over this Russiagate hoax, Mueller nonsense that has paralyzed the government like never before. And frankly, I was there from the beginning, 1970. I lived through all of Watergate as a senior staffer to one of the top Republican leaders at the time. There's nothing like what is staring us in the face around the corner in terms of a government that is non-functional, paralyzed, and at war with itself, and a Wall Street that thinks the government is still there, to come to the rescue, send in the fire brigades if and when needed. And that is the great delusion of the moment, in my view.
I agree. Though the last thing I wanted to bring up, just to kind of wrap all this up, if we had like one big theme here, going back to originally talking about the book and peak Trump and all of this stuff, which is that what Trump is doing, and what I keep telling people over and over again, what Trump is doing is fomenting the very uncertainty he's trying to avoid. He doesn't want a stronger dollar, and yet every day he can't let the Overton window shift a nanometer away from him. Therefore, we have to grab it and make some other headline about this or something other headline about that. And every 15, 20 minutes, an hour, every 24 hours, he has to control the 24-hour news cycle. And because of that, he creates great uncertainty. Every day he goes back and forth thinking, well, in my negotiations, I jog left, I jog right. Well, Wall Street and the global investing community goes, dude, I can't invest on this. I can't manage money on this. What are you, out of your mind? Will you shut up for at least a week? And markets would actually calm down.
They don't, as it was, they don't even manage money anymore. There's no investors left. They were day traders. But with Trump, you're now down to, what does he think about at 6:45 a.m. when he puts out a tweet to 60 million people instantly, because he woke up, with a snit on his mind or from the wrong side of the bed. Even the day traders can't cope with this. They're getting vertigo, and once they get vertigo and lose their bearings entirely, and also, what I keep saying is the market is driven in the short run, near term, by what I call the chart monkeys, just going from 50 days and 200 days and 20 days and all kind of Fibonacci ratios. The chart monkeys are going to lose track of where they are. They're going to get vertigo, and then you'll have a real mess out there.
Oh no, I put together a chart the other day for a blog post trying to explain what was going on. My normal market reports for my people, I do purely quantitative and bar to bar analysis, and I just do it fractally through time. I tried to use as few, lines and charts and all that, because I don't believe in any of that crap anymore. I've tried it all. It doesn't work. And I use two very simple volatility statistics, right? Everybody has all their own volatility statistics. Mine are very simple, which is that is intra bar range, so from low to high, and and the difference between week to week or bar to bar closes. So on a weekly basis, since Trump went on his trade war, those two figures have more than doubled on a weekly basis. If you look at a 2-year chart of the Dow, and you just go and you just look at from the day he was elected until the peak, until the original peak in the beginning of 2018 to the last 15 months, you will see a relatively structured bull market, and then you will see noise and unbelievable amounts of noise. Just go look at a chart of the Dow, and the Dow is the international. Is the international opinion of the dollar effectively, because that's where international capital flows are going to come in and out. My fundamental thesis at this point is that the Dow is going to see the lion's share of the gains once the sovereign debt crisis in Europe really begins to take hold, right? So if the Eurosceptics go ballistic at the European parliamentary elections, all bets are off. We're also seeing this in the Eurodollar futures curve and all of that stuff. Jeff Snyder of Balamber Partners, I don't know if you follow him or not, talks about the Eurodollar markets and how
a lot of his stuff, by the way, because it's
what's that?
Pretty good. I publish it, as what I call contrarian reads on my blog, Contra Corner. I publish a lot of his stuff, republished. Because I think people really need to understand that this is a short dollar world.
Yep.
And when push comes to shove, the whole furniture is going to break everywhere.
Yeah, everywhere. And isn't it funny that it's all just Mises's master builder theory? Argument all over again. When I sit down and I think back on this, because you and I are both Austrian economists, I think back on my basic lessons of Austrian economics when I go back to when I studied this stuff intensely back in 2001, 2002, 2003, I'm just thinking to myself, it's just Mises's master builder parable all over again. There's just not enough bricks to finish this house.
Yeah, right.
There's just not enough bricks. And and the next time they go through a balance sheet expansion, it's going to be $100 trillion. And at that point, the whole thing just collapses.
Right. As a matter of fact, I doubt whether there's going to be much of a positive response to QE4 if and when they get there, and they're going to try to hide it and disguise it. You heard this the other day. A number of the Fed heads come out and they're saying, well, we have a new way to do it. We're going to peg various maturities on the Treasury curve.
Right.
What that is the same thing the Japanese are doing, which is to say they pegged their 10-year at 0.00, and now they're buying every damn bond offered at 0.0 because nobody wants to hold them. Okay,
right. So QE is deflationary, David. It's not inflationary. You inflate the numbers. The numbers, but at the end of the day, the sentiment behind QE is that the markets are so bad that we have to create money because actually the markets are trying to deflate. And that's the takeaway here. That's why it was never going to create any kind of prosperity.
Yeah, but that's why I think when they try it this time, it's going to become so convoluted that their credibility will be gone. They have said it's fixed. They have said we're at damn near the nirvana of Keynesian full employment.
Yep.
The potential capacity fully utilized, actually slightly above the potential growth rate, and all of this stuff, which is just made up numbers because these people are basically what someone said about Bernanke. He's a second-rate mathematician and a horrible economist. Okay, these are all mathematicians, and they don't know anything about economics really.
And the funny part is, this is the part that gets I have to make again. These guys in their ivory tower at the Eccles building and, all around the universities that the Fed pays for and all that, not a one of them has ever traded a stock. They've never traded a bond, none of that stuff. Whereas the PBOC, the People's Bank of China, sends all their guys over here to trade in commodity pits, bond pits, and everything else. They trade all of this stuff and then go back and then set policy. So this is the last fallacy of Trump's thinking that he's going to win a trade war with China when they have better traders than we do.
Right.
In their central bank.
Yeah. Anyway, there's a lot here. If it weren't so dangerous and it weren't so worrisome, it would be a fantastic time to be digging into this. But I'm afraid the shoe is about ready to drop, and it's going to be very unpleasant for a lot of innocent people who have got caught up in this. Yet once again, I saw a story this morning. I posted it on my blog about how all of these people gradually were suckered back into house flipping because, it was so easy to make so much money when interest rates were still at zero and QE was running full speed. Now they're all out there sitting on hot properties in San Francisco, Seattle, and elsewhere where prices are falling. They borrowed up to the hilt. They put huge amounts of money into refurbs, and they're losing their shirts.
Yep.
Because they were suckered back into it, and they're borrowing the money from Blackstone. Okay, so
I know. It's so sad. All right, David, this has been absolutely fantastic, but we're a little over an hour now, and I know you have a busy day. I think we should probably end it here. I'd love to do this again when you have time. We can follow up later after Trump has destroyed the world economy. It'd be even more fun to dance on his grave or whatever. I'm so thoroughly disillusioned at this point. I don't even care. I'd like to believe that he's got a clue and a plan, but I can't at this point. It would be terrible for me as an analyst to not to show any rose-colored glasses at this point.
I guess I would say, and to close off on exactly that point, if you still think he has a plan or an agenda or a program, then you haven't been paying attention. It's obvious by now that this is by the hour, by the seat of the pants. It lurches in every direction. And, if we needed a great disruptor to bring the status quo to an end and a decisive break, you've got him.
Yeah, no, absolutely.
Yep.
Absolutely. Well, David, I really appreciate you doing this. It's been great to talk to you and finally get to talk to you in person, because you and I have been emailing back and forth for months now, and I really appreciate your time and your diligence and all that you do at Contra Corner and all of that, because I think it's very valuable to have a person of your standing just do what you've been doing for the past 10 or 15 years now. I remember when you first made the big shift and became an open contrarian to this. I remember reading it on Lou Rockwell all those years ago and going, yes, okay, someone finally gets it.
That actually, leave on this, but it was 2007, 2008, when I bailed out Wall Street. That was the last straw. I said, I've spent the last 2 decades in the investment business. Actually, I was in the LBO business. I haven't been paying that close attention, but what the hell is happening here? Well, we got to bail out GM and Goldman Sachs. And that was kind of a wake-up call. Okay.
Right. All right. Well, sir, you have a very great day and a great weekend. And, it's Mother's Day on Sunday and all of that. So we will talk soon. I certainly hope.
Yeah, very good. Thank you.
Mm-hmm. Bye-bye. Well, thank you for tuning in. You can follow all of my work over at tomluongo.me. You can also follow me on Twitter at TFL1728 or Gab when I decide to actually check in. Same username. You can support Gold, Goats, and Guns directly through PayPal, through Patreon. There will be links down below in the description to this video. Thank you again for tuning in, and we will talk to you soon. Be well and keep your stick on the ice.